Ladies and gentlemen, it is me, the Einstein of Wall Street, here from the floor of the New York Stock Exchange, greatest financial institution in the world, the ceiling, the floor, quarter of 250,000, 3 A's, Wall Street Global Trading Academy, the Dow Jones Industrial Average, closing at 49.5, only inches away from 50,000. The S&P closing at 6.966, just an odd lot away from 7,000. Up 45 handles, 1.1 billion on the tape. 1.5 to 1 volume up, advances versus declines here. Transports up, VIX down, fear out of the market. Russell up, tech up, gold up, Brent up. I mean, it's all up. There's nothing but green on that screen. Closing out a week of maybe worry, or a week of roller coaster of love. A little bit, 2 days up, 2 days down, and then one solid green day. The bulls are back in town. Now, where do we stand? 2 back-to-back solid bullish days, right? Obviously, there's a lot going on with what's going on in the with the White House and with Venezuela and stuff like that. However, today we got plenty of economic data that was incredibly significant. Okay, we do know that in the nooks and crannies of the last Fed meeting, we did find out that the economy was doing way better off than we thought. Then we started to trickle out September, October, November, December, a lot of that economic data which we did not get when we were in the blackout. So we're getting some old stuff and some new stuff. Today they revised those numbers down on the jobless claims down at 68,000. Then we had unemployment dropping. Then we had non-payroll jobs also at a low. So, but look, I mean, there was a mixed messages because at one point it looked like the economy was actually getting a little softer with some of the jobless numbers. However, then we saw a lot of strength across the board in so many different ways. So one message was, we're not going to cut rates because we don't need to, because the economy is strong. And then the other one was, you know what, we're starting to get a little bit of a softer data coming out, and we may have to cut rates. So I'm still not clear. They're not clear. It's not clear. Let's just not worry. Right now, we're closing out week 1, full first week of January. As January goes, so does the market for the year. We don't know anything about that as yet. We're going to have earnings start to come in. We're going to get more clarity about the Fed and what they're going to do. We're going to start to understand in the next 15 days when are we getting cuts, how big are they, and what's the projection and guidance going forward as far as cuts go. That is incredibly important. At the end of the day, we were made very clear by the way the market reacted. The probability is now around 95 to 98% that we are not getting any cuts here. And that's a function of the fact that the economy is doing better than we thought. We did see that a lot of these major players, their portfolios are very interest rate sensitive. We saw that last time when the interest rate probability went down to 15 and up to 88. It sold off, sold back up. At the end of the day, you don't want to learn. You want to learn to trade. You want to learn to trade futures. Apex Trader Funding, our preferred trading, Wall Street Global Trading Academy, David Green, my man, my mentor, my friend. Check it out. You got to be in it to win it. Ladies and gentlemen.